Investing is not that complicated, and theoretically we only need to use a few well-known ETFs to cover our needs in almost any situation, whether for long-term investing, short-term saving, or even if we are in the phase of paying out passive income. Investing through ETFs is not only time and cost efficient, but also it is the most suitable solution for most investors. And that's why in this video we will focus on 5 ETFs that should cover all of our investment needs. And theoretically, we won't have to use anything else. Before we begin, for complete beginners, let's just review what an index ETF actually is. An index fund is essentially a large basket of all the stocks included in it. Every time you buy an index ETF, you own a small portion of each stock in that basket. So when you buy an S&P 500 ETF, you own a small piece of each of the 500 stocks in that index. That means you own a piece of Google, Meta, Amazon, Nvidia, Microsoft, and 500 others. Buying ETFs is a very simple and effective way for us ordinary investors to invest our money. Instead of having to analyze and buy each stock separately, you can invest into ETFs that are safe, well established, and well diversified within the seconds from the comfort of your home. This style of investing, that means investing in index ETF, is called passive investing, and I would recommend it to anyone who is just starting out with investing or does not want to spend too much time analyzing stocks and monitoring reports, but simply wants to put their money somewhere where it will work while they sleep. This strategy is also brilliant because all you need to do is buy and hold. Whether you choose to buy every week or every month, it's up to you. But the longer your funds are invested, the longer the power of compound interest can work in your favor. I myself am a fan of this type of investing, and it makes up almost 50% of my current portfolio. In case you want to get access to my current portfolio composition and all of the movements within it, you can become the member of this channel. But let's move on. We mentioned ETFs that track the index SP 500, but today we can find ETFs that tracks almost anything. There are ETFs that track individual sectors, ETFs for gold, real estate, and lately even crypto ETFs. And since there are so many options and types of ETFs that you can choose from on the market, I decided to make this video to help you choose and to introduce you to my top 5 ETFs that should cover all of our investment needs. Before we fully dive in, it is important to clarify a few things and parameters that we will encounter throughout the video, and based on what we will choose when trying to find the right ETFs at the broker. You might think, for example, that there aren't that many ETFs that track the SP 500 index, and that you will be able to choose the right one right away. But in reality, almost all of the larger and better known brokers offer several, sometimes even dozens of variants of these ETFs, which differs in managers, fees, currency, stock exchange, or even the type of dividend payment. Let's take it step by step in a clear and simple way. When it comes to ETF managers, it doesn't really matter which one we choose as long as it is one of the largest. That means one of those that already manage a lot of assets. So for that reason, I would choose between iShares from BlackRock, Vanguard, Invesco, or State Street. Personally, I prefer iShares from BlackRock because it is the largest asset manager in the world right now. So we have the manager. Now the question arises whether to choose an accumulation or distribution ETF. This means that when companies pay dividends, will the ETF reinvest them or pay them out to us directly? And simply because we mostly want to invest for a long term and do not want to bother with taxation of dividends, we will choose in majority of cases accumulation ETFs, therefore those with the abbreviation of ACC. It is also good to know how long the ETF exists so that you know that the ETF already exists for multiple years or even decades, and therefore there is high potential it will be there for a long period of time as well. And finally, when we are choosing an ETF currency, it is best to choose the currency of the country in which you live or in which you have your brokerage account, so that you incur as little exchange rate risk as possible while also avoiding currency conversion fees as much as possible. Alright, so the first ETF from our top 5 selection is also one of the best ETFs ETF suitable for long-term passive investing. iShares Core SP500 UCITS with ticker SXR8, which may differ based on the stock exchange you buy it from, so always check the ISIN number as well. High liquidity, low fees, in USD, accumulative, and as the name says, it tracks the well-known SP500 stock index. What means that it is also well diversified, as the SP500 includes the 500 largest US companies from various sectors with weightings based on size, and also it has been around for a long time. Whenever you are choosing an ETF, I recommend going to the Just ETF website, where you can enter the name of the ETF or ISIN or ticker or anything, and thanks that easily search for any ETF and find everything you need in a matter of seconds. As we open the SXR8, we can go to its fact sheet, where we can find even more details about the ETF. On the right we can find all the necessary info: launch date in 2010, currency dollars, expense ratio is extremely low at only 0.07%, it is a cumulative ETF and also is big enough. Down in the PDF we can also find yearly performance in comparison with benchmark, what is in this case the index SP500. We can find here also growth of hypothetical $10,000 since inception, same as cumulative and annualized performance. Nextly holdings, sector breakdowns, and everything else you need to know about the ETF. So if you don't want to think about investing too much while your portfolio is still well diversified, this ETF might be the right choice for you. But as always, this is not a financial advice. However, if you want a more diversified ETF that also includes companies outside the US, it is advisable to look for an ETF that tracks the performance of companies from all around the world. For that, the most suitable option might be a cumulative dollar ETF from BlackRock, iShares Core MSCI World with ticker EUNL. It contains companies from the world's largest economies such as the US, Canada, UK, and Western Europe countries. By investing in this ETF, you are investing in all of those global companies that are generating earnings from all around the world, even from emerging economies. Therefore, even though this ETF is not covering all countries, you got ETF theoretically covering all world. If we want to invest in something more dynamic with potential for faster growth, but don't want to analyze individual companies and big stocks, then it may make sense to diversify our ETF portfolio, for example with a sector ETF, which we believe could outperform the SP500 itself in the coming years. The sector that has performed the best in the last decades is the technology sector, which is in itself a broad term that includes a number of subsectors such as software, semiconductors, cloud computing, and cybersecurity. However, if we want to have a greater representation in the technology sector, then it makes sense to choose an ETF that tracks the most well-known technology index, which is the NASDAQ 100. But be careful, because in addition to technology companies, the NASDAQ also includes some American non-financial companies. So let's search for NASDAQ 100, accumulative with low fees in USD, and in the end I would choose an SXRV, which once again has already long history, low fees, and perfectly copying its benchmark. If you choose to invest in an ETF covering the SP500 and at the same time invest in ETF covering the NASDAQ Technology Index, you must take into account that some companies such as Apple, Microsoft, and others will be duplicated, as they are inside both indices, the SP500 and in the NASDAQ as well. This is not necessarily a bad thing, but it is good to be aware of this overlap. In case we invest for a shorter time frame or need to put money somewhere for a short-term holding like 3 to 5 years, then stocks don't make much sense for such a short time frame. Although indices have been growing like crazy in recent years, this has not always been the case historically, and it is quite possible that there will be a period of a few years when indices will only move sideways or lost value, in which case holding funds in such instruments for a short period of time may not pay off. Similarly, if we have invested a large amount of money and no longer need to chase extreme annual growth, or do not want to risk excessive losses and therefore do not want to be 100% invested in stocks, in such case it is worth considering diversifying part of the portfolio into more defensive, more conservative investments. And in the world of investment, there is perhaps no safer and more conservative asset than bonds, or more precisely, government bonds. Of course, there are also riskier bonds due to the purchase of bonds from risky countries such as Greece a few few years ago, but as we strive to minimize risk, we are going with the US bonds. I would focus on short-term bonds with the maturities of 0 to 1 or 1 to 3 years, as these will not be as sensitive to changes in interest rates. For everything what I just mentioned, I would go for the IBTA ETF, that for iShares Treasury Bond 1 to 3 years, which is in the US dollars. It is accumulating ETF with low fees, and as we can see at the bottom, the performance in the last year was 5.7%. But of course, for the next years, we might expect much lower performance, as currently rates in the US are set to 4.5% and are expected to go lower in following months. Okay, and finally, let's say we already have some investments and would like to choose an ETF that will provide us with regular passive income in form of dividends. Of course, we could look for individual stocks that pay the highest dividends, but since we don't want to analyze all stock individually and we want to keep our portfolio diversified, it's worth to choose the best dividend distribution ETF for this purpose. So for that, now we are searching for the dividends, low fees, high volume, distributing dividends, and for that purpose the SPDR SAP Global Dividend Aristocrats ETF should work just well, which invests in US stocks of so-called dividend aristocrats, which have been paying dividends regularly for several years in a row and increase their dividends every year. The indicator that interests us the most is the dividend distribution yield, which tells us how much of the invested amount we will get back every year in form of dividends, together with the ETF's total historical price return. It is not a problem to find a stock that pays dividends of over 6 to 7%, but the share price may stagnate or even falls, leaving us in the end with only dividend yield. Therefore, we want both the high dividend yield and for shares to grow. That is why we are going with already mentioned ETF of dividend aristocrats that not only pays off dividend of almost 4%, but also grew on average by 10% every year in the last 5 years. Alright, these were the 5 best ETFs you need to know about and which will cover all of your investment needs, whether for long-term investing or short-term money storage. Of course, next to ETF, you may consider investing into other types of assets as well, like gold, real estate, or even crypto. So what about you? Do you have any of the ETFs I just mentioned in this video? Or in contrary, you have some ETF I did not mention, but you think it should be in the portfolio of every investor? Let me know in the comment section. And that's all for me. So in case you want to see more videos like this, don't forget to hit the like and subscribe as well. Thanks for watching, have a nice day, and see you all in the next video. Goodbye.